In the meantime, volatility is what certainly was the case leading up to the election. Well, it is a positive development now after the election, and this notion that there's going to be a kumbaya atmosphere, you might want to hold off on the confetti for that. The former commissioner of the U.S. Commodity Futures Trading Commission, Bart Chilton, with us right now. Bart, good to have you.
Couldn't be more happy to be with you, Neil.
You know, people always think that after an election, a midterm or otherwise, things settle down. History tells us quite the opposite. But for now, they're rejoicing that it seems things like the VIX, the fear index, and all these other things, wild swings, for example, Bitcoin, have eased. But that tends to be short-lived, huh?
Yeah, and I mean, not to talk too much about cryptos, but, you know, it's weird because all the volatility you've been reporting, particularly like last week leading up to the elections, the stable ones, who would have thunk, Neil, cryptocurrencies of all things.
That is weird in and of itself.
Isn't it?
That's almost a sign of respect now, isn't it?
Well, I haven't figured it quite out. I think I haven't figured out
technology, in other words.
That's correct. I think at some point there will be some, you know, tying to equities with cryptos once they become more stable coin-ish. They could still go crazy here, but it was just weird last week when they were sort of de-linked and they were the adult markets in the room.
Well, I guess we're so used to these violent swings, you know, and when we don't see them, we're startled. But what is your sense of the entire investment landscape, not only at your old haunt and looking at commodities and options and special, you know, vehicles for investing, but what do you think?
Well, if you take the commodity stuff just real briefly aside, some of them are having a tough time, soybeans, et cetera, primarily because of the trade tariffs. But in the equity space, all the stocks...
They've all tumbled, right? A lot of them.
They've tumbled. Soybean prices are down 25%, and they're down actually, and that happens to be 25%, the amount of tariffs that Chinese, that were placed on goods. So
a one-signed deal could potentially reverse that.
It could, but I mean, not to focus too much on ag, but look, farmers have had net farm income down for 4 quarters in a row, so they're already hurting.
What about oil and all the other stuff?
That helps, but I mean, ethanol's not doing gangbusters right now. So in the commodity space, things could be better. On equities, I mean, as you reported yesterday, you know, Dow was up 551. Things are looking great today. I wouldn't have anticipated that it would be that good. I think it was a massive sigh of relief, I guess. And I hate to say this as a government guy, but it's almost like gridlock was good for markets yesterday. Don't like it, but it appears that's the case.
Well, I guess the prevailing wisdom, you can correct me if I'm wrong, Bart, is that in such an environment, not a lot can get done by the government, but we need a lot to get addressed by the government. So there's sort of like a catch-22 there. The deficit's the debt. What will be an inexorable run-up in rates, that maybe not today, but certainly in the next month and in the months to come. And that's not, you know, a government debt's friend right there. So how does that play out?
Well, I mean, it depends what sector you're looking at. If you're looking at the markets in the aggregate, I think sort of the boogeymen are, you mentioned one, rates out there. Are we tightening and is it too fast? And I don't know, but it's certainly a reasonable question. Is this a normal tightening sequence so we can get rates up high enough that if something happens, that there's something you can do to play around with it? That's one thing. I think trade is still the boogie person out there, and we're not going to know, I don't think, a lot, Neil, until the end of the first quarter. You know, all the things for Christmas had already been ordered. So it's going to be
more expensive. Some of the big retailers, Walmart included, were already telegraphed that they're seeing problems and higher prices. That I think they just put it out there in case things are slow this holiday season. That was a factor. Is it a big factor?
I don't think so yet. And here's why. They order these Christmas things like in May and June before the things were implemented. But once we get past if you know, the G20 happens in Buenos Aires at the end of the month and nothing's going on between President Trump and President Xi, if that continues, I think into the first quarter, when those results come, there could be something that happens before that time. It could be rates. It could be a government shutdown. December 7th is when the continuing resolution ends up. There could be something else that comes in December 7th. Now, Republicans still control things here, so, you know, theoretically they should be able to pass it. I hope it'll happen. But there may be something else that happens, too. I mean, things are crazy, right? So I think markets are on a teeter-tot right now, and if some big event happens, whether or not it's shutdown, whether or not it's rates, whether or not it's trade data that comes in at end of Q1, something could easily put it over, and I think, then we might see a downward slide in markets.
Wow. All right. We'll watch closely, Bart. Always catching up with you. I enjoy it. Thank you very, very much.